It's Don Kaufman here, August 12th, 2020, seconds after the cash close on this Wednesday afternoon with the markets. They are just off all-time highs. You believe this? I mean, we're close to making literally all-time highs right now on what has been some just horrific economic data. There's actually a couple things out. Well, the one I'm really specifically referencing happens to be the UK GDP. If you missed that one, minus 20%, but it's okay because stimulus is with us. Push all of that aside for just a moment. Let's actually focus right here, right now. What matters inside of this marketplace? You know, one of the first things that really kind of comes to mind over here, it's not even the fact that, you know, the Nasdaq, we're gonna cover the Nasdaq in a second, up some 2%. What I'd like to cover first, correlation made a huge comeback in correlation. In fact, I talked about this literally on last night's video that the correlation coefficients were off. I mean, we were literally sitting 50-50 yesterday with the Nasdaq getting hammered. Obviously, the Nasdaq spurts back to life in a big way today, but so did, again, correlation. In fact, when we started off the day, we had 101 products trading to the upside. Yes, I know it's the S&P 100, but there's 101 stocks in it because Google is listed twice. We had 101 products though to the upside today, and it's not necessarily how this day necessarily finishes. Again, it's more about the correlation coefficient came right back into play. Now, this was, again, the big conversation piece on the day amongst traders, and I do talk to a lot of traders throughout the course of the day, was the fact that the financials, okay, the financials, the interesting thing, they were actually the leader of the pack in early trade. The financials, just to display this to you, let me go ahead and open up to a kind of full-blown daily chart. They had gapped substantially higher today, trading, all right, in and around the 25.77 handle. In fact, if you take a look at this in terms of auto expected moves, it's exactly the stuff I was talking about yesterday. Yesterday at the close, the financials were sitting yesterday at the close at the upper edge of their expected move for the week. At the exact same time, okay, what did we see? We saw the QQQ or the Nasdaq right at the lower edge of the expected move. All of a sudden, the correlation comes back into fold, right? And the entire market just spurts higher. Obviously, a lot of that was done on the back, of course, of what the Nasdaq did. But it's important to understand at this point in the game, and again, when I'm looking at the NQ, in fact, to make this a little easier, I'm actually going to bring up the QQQ. But to just put this into scope, you got to understand in this week of trade, the Nasdaq right now is flat on the week. I know you're looking at it's been a huge Nasdaq rally. It's this, it's that. Actually, no, the Nasdaq literally flat on the week. And when I say flat on the week, again, what you're looking at in terms of expected move here, the expected move, that little dark line right through the middle, that's exactly where the week started. So net, what do we have in the Nasdaq? Absolutely nothing. But if I say it's absolutely nothing, of course, everybody immediately disagrees. But Don, the S&Ps, they're right up against all-time highs. Yeah, and that's in large part due to the financials. Because the financials, they're still, even though they reversed today and they're down 7 cents, they are still up. Okay, big league. And it's still the financials, okay, that need to get it done. I mean, you need to see the financials come right up into the 26, specifically, okay, the 2650 level to have the S&Ps really start to not just hit all-time highs, but to start to break out effectively to the upside. And that's still going to be one of the more preeminent trades. The interesting thing, though, the Russell throughout the course of the day defected right along with those financials. Again, the entire marketplace can come down really, to the monsters of tech, right? We're making new highs and bad economic data. The thing that you have to put into scope is that for the most part, you could have, huge amount of the S&P 500 rallying, but and including, of course, the financials, but it doesn't necessarily matter unless Apple says so. And you got to recognize that the Apple, the Microsoft, and again, you have to, on a day-to-day basis, almost open up, the market caps of a number of these products in here, specifically, Apple, which is just shy now of the $2 trillion market cap. I'll just pull Microsoft up there for fun. Microsoft about to hit 1.6 trillion. Kind of interested in Amazon. Amazon is almost neck and neck with Microsoft right now. It is, people, a brave new world we're living in because effectively you can have 4 or 5 stocks. It's been like this for a while, but now 4 or 5 stocks, everything else just pales in comparison to those underlyings. And that's when I say, we're going to be making new highs here and some horrific economic data. In fact, tomorrow morning, of course, Thursday morning, what do you get? The initial jobless claims. That's actually been rather insightful from time to time, but those initial jobless claims, okay, you have to kind of wonder. It could be absolutely horrible, but it's okay. Everybody's going to be online. And again, we're just pushing capital towards the same products day in and day out. Obviously, Tesla also played a role inside of the Nasdaq today. You have to give really, you have to attribute some of the up move in the Nasdaq specifically to Tesla. It's a 13% move. And again, it's only been a few weeks since I've been talking about this, but you can't discount the fact that also in terms of market capitalization, okay, Tesla, it hasn't just come up in the world, right? You're looking right now at a $300 billion company, which you're immediately going to say, that's nothing. That's nothing in comparison to like an Apple or a Microsoft. It's not what I'm comparing it to. I've been comparing it lately to catching up to stuff like Walmart. Now you're only a hop, skip, and a jump away from a Walmart market cap in a Tesla. Okay, but the difference is this. If you take a look at Walmart, this is why I want to express why stuff like Tesla really matters. Walmart, go about 30 days out, just open up the 30-day expiration here, and I just want to highlight this for a second because this is pivotal stuff right here. See that? It's about a 32%, okay? That is the implied volatility. And compare that, of course, to none other than Tesla. Now, where is Tesla? You're looking basically at what? 70%. So even though Tesla, okay, doesn't quite have the market cap of Walmart, it's closing in on the market cap, it has twice the volatility, which effectively means from a market cap standpoint, okay, that it's not trading like your average $300 billion company. It's trading more like a $600 billion company, which then, of course, brings us to none other than Facebook. Why do we go to Facebook? Well, Facebook is about a $740 billion company, okay, but Tesla, okay, net, with its volatility in comparison to Facebook, Tesla is as important now. Because the volatility is so high, and again, this is always missed by people, right? Because the volatility is so high, Tesla becomes now as important as a Facebook because its volatility is effectively double. So Tesla equates to almost double the weight out there. So again, critically important. It's not just about market cap. The implied volatility is also critical because you get an underlying that's capable of moving around, 10, 13% a given day. Mr. Toad's wild ride comes alive, and that's going to move the entire index product, and that's exactly what you're seeing inside of the Nasdaq today. All right, so we talked a little bit about a correlation comeback. The correlation comeback, I think it's really going to matter in the next couple of days, and let me get to specifics of why I think the correlation is so important. I left that for, right here, right now. The correlation is incredibly important. The bonds look unstable. Okay, and let me actually relate both of them. One of the things that I've been watching inside of bonds, bond volume, okay, is exploding. So this is the bond volume. Also, if you're kind of interested, the notes are what a lot of the banks trade. The notes this morning, we're actually doing more volume than they do in most trading days. They had already done that before the cash opened. But we're clear up here at 1.5 million contracts traded through in the notes. To bring up the S&Ps, you realize that the S&Ps didn't even do as much volume as the notes. So what gives? There's a huge trade underway inside of the bond product here. And the question is, how is this going to resolve itself? Because people, what you have to recognize here is as these bonds have gone down, and I was talking about this again last night, but it's important right now, as the bonds have gone down, rates, okay, that's the interest rate associated with this, have been flying, okay? So interest rates going up, and again, the great way to look at the interest rates going up, just pull up none other than TNX. So you can see the interest rate actually popping up to 0.67. As interest rates go up, it usually helps the financials, except if they move up incredibly fast, it can actually hurt the financials. So the bonds, if the bonds, and again, strictly my opinion here, if the bonds continue to see some sell-side activity, it's actually going to dampen the spirits of the S&P 500. At this point, the bonds have actually moved an extraordinary amount to the downside. any continued follow through to the downside, rates are going to come up and everybody's going to say that's going to impede upon the economy. That's when the Fed may even have to step in if the sell side activity persists inside of the bond product. You have to watch the bonds very, very carefully. The bonds selling off are capable of taking markets apart at the seams because, again, it's a big kind of adversarial trade. The bonds selling off should be a good thing for the financials. The bonds selling off hard can actually take everybody apart, including the financials. Keep that in scope over the next couple of days. That right now, people, this is more important than what's going on inside of tech. It's more important than the fact that some people are calling for, it's a double top, it's this, it's that. Listen, we're a hop, skip, and a jump away from the all-time high inside of the marketplace. Again, in large part, predicated to the idea that this is stimulus everywhere. That and the fact that we just keep shoving more capital into the same market cap, and these stocks that do make money right now are buying back their own stock. And they're the only stocks buying back their own stocks for the most part. To switch gears one more time on you, you know what? I found an interesting trade on a beaten down tech stock called Intel. If you're unfamiliar with it, get out of the rock from which you are hiding under. I'm actually looking at doing a number of ratio back spreads in Intel, something along the lines of, again, selling the 4850s, for instance, buying the 51. Okay, I'm actually putting this trade on for a very, very mild credit. I executed into a couple of them today. What this trade actually amounts to, well, let me actually take you over to my analysis here. And I've got all kinds of trades that I've been analyzing throughout the course of the day. Nevertheless, I'm actually going to hide simulations and show you some of my existing positions inside of none other than Intel. Knock out a couple of the other positions in here. Okay, and what you're looking at in this particular back spread, listen, my back spread will make money if Intel falls. And remember, I just talked about doing a bullish back ratio in here, a bullish back ratio. But I wanted to start off, my back spread will make money if Intel falls. My back spread will also make money if Intel explodes to the upside. There is a valley of death to consider in here. That valley of death, starts somewhere. Okay, close to about 50 is where it starts to kick in. 51 is in high gear. And we would need Intel, worst case scenario, above about 53.30. Okay, 53.30. So where do you really need Intel? Pretty much in this neighborhood right here to start to see high degrees of profitability. Or I just need Intel to break down. Anything in this range, again, from that about 49 to roughly like 53, that would be a little bit of the valley of the death where you're going to take a degree of risk. I like trades like this because, again, it's not costing me anything up front. Any risk that I'm going to have, of course, could be mitigated the closer you come to expiration. Again, markets, they're hot today. They're right off the all-time high. Again, the Russell, not so hot. But net, what you have in this marketplace right now is correlation is back. That can either be bullish, okay, or bearish. If we're going to break through to an all-time high, watch the financials. Again, in very large part, we believe that the financials would be a great hedge. If the markets are going to break to the all-time high, the financials are going to migrate right up to this 2650 level. Consider that, okay, for a trade opportunity inside of the coming days. Thanks, everybody, for joining us here at TheoTrade. Have a wonderful evening. Bye-bye.